checking in those bags, shopping when we land. Big FN bag of ballin'. Plead the fifth if I get caught, they talkin'. Came to drippin' on them, I been saucin'.
In this video, I'm going to be going over why having a low win rate is very bad. And before that title startles any of you guys to go to the comment section, let me elaborate. Having a low win rate technically isn't bad, but it's just not optimal. And I'm going to show you guys exactly why through this simulation here today, as well as a free expected value calculator here. So if you guys know how risk reward and win rate works in terms of the correlations between them, you'll know that the lower your win rate, you need a higher risk reward to make up for that lower win rate to be profitable. Now the problem is catching extremely high risk reward trades like 1 to 20 on average is extremely hard to catch, okay? And your win rate is going to be extremely low. So let's just do a quick simulation here. At 50% win rate, at 2 risk reward, you'll be profitable with a 0.50 EV. At a 40% win rate, you'll still be profitable with a 2 risk reward. However, this is about break even in a live market due to spread and commissions. Keep that in mind. Now, as we get lower in win rate, you can see it becomes like a negative trading system and strategy. So this is when we need to start increasing our risk reward to make up for that low win rate. As you can see, we need at least preferably a 1 to 4 risk reward at a 30% win rate to be somewhat profitable. And having this type of win rate or this type of risk reward is not as easy to maintain over a long period of time. Okay, so let's say if you keep going lower in terms of win rate. This is about roughly almost break even, I'd say. Now, when you get to the very low end of win rates, it gets extremely hard. Okay, so you need like a 6 risk reward average. If you've traded before for years, like me, I'm 3 years in, you should know that getting an average 6 risk reward, even on a 1 minute time frame, consistently is extremely difficult. And that's why you can see that is essentially what you need with a 20% win rate. Now you can see obviously crazy win rates, it will be very profitable, but you're not going to be hitting those at 20% odds. So you essentially, to make it as preferable or optimal, you prefer at least a 1 to 10 risk reward to have a very good trading system at 20% win rate. And 1 to 10 is insane. And also, you must be holding those trades for a long period of time to be catching those trades even off the 1 minute. For my 1 minute traders like me that enter off the 1 minute, I'm not entering solely off the 1 minute. There's a lot of multi-time frame analysis from high time frame to intermediate to low time frame that I teach also within the course and mentorship. But what I'm trying to say is you definitely need, like, it just takes a different type of level to hit those 10 risk reward trades consistently. Hence the 20% win rate. So now that we know these odds, let's go to the calculator. Okay, this calculator, let's start with initial balance of 1K. Let's say you're risking 1% per trade. That's industry acceptable. All these traders can accept a 1% consistent risk per trade. That's not over trade, that's not over risking or under risking in my opinion. That's good. It's a good percent, because you need 100 trades to lose your account, and those have to be 100 losses in a row. That should never even come close to happening. So good trading risk management. Let's say you have a 70% win rate. I'm going to show this as an example here. Let's say you take about 3 trades a day over maybe a year. Let's do a year for now. You can see compounding, by the way, this is including compounding, 1K to 14K. So about 14 times your account. Taking this many trades per month over 12 months at a 70% 1-to-1. Not bad, right? Now the main thing we want to look at in today's video is the drawdown. You really want to look at your max drawdown compared to your total profit, because that is very important. This way you know when you're live trading this system what you can expect in terms of drawdown. And even with the 70% system, you can expect about 6 to 7 losses in a row. at a 70% win rate. Most people don't have a 70% win rate. So you can still see you're expected to lose potentially 6 in a row, and it's still within normal range boundaries of your training system within a year in this sample size. Now let's see what happens as your win rate decreases. Now in this case, it didn't change much, so let's decrease it even more. At this point, it's gonna be way worse because, like I mentioned to you guys, after spread and commissions, win rate of 50% at 1-to-1, which actually Calculator did a very good job with here, is basically negative, right? Because the expected value is 0 minus commissions and spread. So you can see the max drawdown is no bueno. This is very bad max drawdown, negative 34%. You can see how, let's say you have a profitable system. You can see it improves the drawdown, right? But let's say the lower your, so remember when we had a 70% win rate, we had a max drawdown of about 6 losses in a row from what I remember. So all right, let's do worst case scenario. 7 losses in a row for 70% win rate. Okay, fair. And let's go to the deep end. You can see the drawdown in low win rate systems, despite being profitable, this is still a profitable system. The drawdown is way worse, negative 40% drawdown. That is insane drawdown. And 20 losses in a row. Actually, let's just make this more better. Like 23% drawdown. That's still a ton of drawdown. Can you handle losing 19 times in a row? So there's 2 problems here. First off, I want to address one thing. For max drawdown for any system, me personally, now obviously this is going to be affected by the risk percent you risk, right? If you risk 2%, it's going to be double max drawdown. For 1% risk per trade, in my opinion, your max drawdown across a year should not exceed 15%. 20% is like the rock bottom. If it's over 20% drawdown, cut the system out, in my opinion. That's a lot. That's hard to handle psychologically. And you won't know what I'm talking about unless you've been there before. Losing 20 trades in a row is absurd, crazy to say, but when it does hit you, you won't know how to react or feel. You might think your strategy has suddenly stopped working, and that's majority of cases just not true. It's just the market conditions aren't favorable of your strategy at the time, and you're just executing the law of large numbers. So that's why you need to be extremely careful with this calculator and understanding what these numbers are trying to tell you. So let's say you have a 1-to-5. Now drawdown, obviously you can see, is way better, right? Better your system is, but still, this drawdown is very bad. So number 1, it's a big hit on your account size. Number 2, it is a big hit psychologically. And what happens is when you have this losing streak psychologically, you're more vulnerable to making major emotional mistakes like overtrading, revenge trading, over leveraging, not being patient for your next setup. All these things I listed, majority of people, even humans, we're all humans, we have emotions. Majority of us will just blow the account at some point. At that point, just take random trades. Oh, it goes up, I'm gonna buy. Oh, it's going down now, I'm gonna sell. Your stop loss just gets hit in these bad market conditions. And so that is why I emphasize so much on to not have a system with a low win rate. It's just hard psychologically. I'm just talking from experience, as well as the numbers are showing it. Psychologically, it's a lot harder to deal with, okay, to trade this type of system. My general rule, I understand, is people that trade like very high risk reward trades, systems that are very profitable at extremely low win rates, but my personal experience or guideline is 40%. 40% is the bare minimum win rate I'll be fine trading with and be able to manage psychologically fine with before it tanks. Meaning everything takes a hit, right? Drawdown, psychology, everything. Because don't forget, when you're on a live account, this is your own personal money. And if you have rent or you have bills due, like majority of people do, right? Then you're gonna need to find another source of income or something to pay at the end of the month. Because if you're in that much drawdown, it's gonna be extremely difficult. I'm gonna tell you that right now. So again, everyone starts from somewhere, but as your account scales and compounds, it's gonna be a big financial loss or big financial hit on you. Even though proportionally it's not, it's still gonna be a big number. So you need to be prepared for that if you're trade a low win rate system. So from my view, personally, I don't mind high risk reward. Okay, as long as the win rate is above 40%, it's good for me. Okay, now my trading system is about a 65% win rate currently at a 3.5 risk reward. After spread, you could say it's probably around 3 risk reward. Okay, and my drawdown is around, I think, 10% max for a year, so not bad at all. But I'm just here trying to show you guys truly the power of how trading works in terms of profit and expectancy. Let's give I forgot the word is, but let's just say I was at 60% win rate. Give myself a lower performance rating because maybe it's psychology or emotions, or maybe I might take a few next bad trades. So let's just say my system is a little worse than what it is currently live trading. So 60% at 3. You can clearly see that my max drawdown is indeed way less than these very low win rate systems, right? It's just a lot easier to handle. Now, you don't want to take this calculator too seriously in terms of the numbers it's giving you, because this is taking into consideration that you're compounding and not taking out money every month. And majority of people at the beginning, you're gonna be taking money out of your account and withdrawing all the time to pay for living costs, obviously. And depending on how big your account is, it could be a big percent of the account. So don't take this, just take this calculator with a grain of salt, honestly. Okay, this is mathematically, yes, this is mathematically proven true. This is mathematically accurate with compounding in mind. If you're not compounding, it's not going to be anywhere close to this. It's still going to be a great number, but not anywhere close to this. And since you're taking out money, most likely, like 99% of traders in the beginning few years, I'll say, depending on how long it takes you to grow your capital, your account, how good or how fast you become profitable, and how well you manage your psychology to execute consistently, you might take a big percent of the account per month, and therefore your compounding is not going to be anywhere close to this percent here. So again, take it as a grain of salt. Don't take this calculator too seriously. Set realistic expectations for yourself, and that's why you don't want to judge your numbers off of this here, just because you're not gonna, I highly doubt you're gonna be risking 1% until you train this same account size and not taking any money out of the account, right? Most people, it really depends where you're also from or as well in terms of the country, right? There's first world, third world, second world countries. So these numbers, just look at them, and they're just numbers at the end of the day to show you mathematical edge of having something that's proven to work, strategy that's proven to work, plus good psychology equals profitability, and able to basically print money from your computer or even your phone. You just need internet access. That's it. But that's it for basically this video. I just really wanted to go over my view on low win rate systems and why I personally dislike them, and why I really prefer a higher win rate system. Even though sacrificing a little bit of risk reward, I'd still prefer that higher win rate system for psychological purposes. And that's what I teach my students as well, to prioritize the win rate at first, and then later you can optimize your risk reward. So that's it for this video. Let me know if you guys want any further type of training content related to this stuff. You can check out essentialtradersuniversity.com for the course and mentorship if you're interested. I have about 2 spots left for the private one-on-one mentorship, where in 3 months, I'm going to try to get you as fast as possible to profitability within that time period. We're going to have private one-on-one calls. Okay, I'm going to check in, make a personalized training plan for you, tailored to your life schedule, because everyone's schedule is different. And then there's also a free Discord as well on the website. Actually, if I go there right now, free Discord on the website, scroll down, click here to join our free Discord. So click there to join the free Discord if you're interested in connecting with other like-minded traders. And I will see y'all in the next one.